Students, in this lecture we are going to learn how to give effects to the different adjustments given after receipt and payment account in the question. Suppose the adjustment is given for rent and into bracket it is given 11 months. So it is like a hidden adjustment. So you know that this rent is paid only for 11 months and the amount is rupees 11,000. So 11,000 divided by 11, it means the rent is rupees 1,000 per month and the accounting year is for 12 months. It means 1 month rent is outstanding. So we have to give the effect. So that I am going to explain how to give the effect to the outstanding expenses, incomes later on in the same lecture. Then the second adjustment, 10% loan from Bank of India rupees 20,000 taken on 1st January. See, the loan is taken on 1st January and the accounting year closes on 31st March. It means January, February and March, only 3 months interest will be due on this loan. So that effect for that outstanding interest we have to give. So 10% of 20,000 comes to 2,000. Of that we have to take the 1/4 amount, that is only for 1 quarter. Then leasehold land rupees 1 lakh for 10 years taken from 1st April 2019. So 1 lakh divided by 10. So 10,000 is the depreciation for this land. Then sale proceeds of furniture, book value 7,500 and sold for rupees 8,000. So 8,000 is the selling price. From that the book value, the original value 7,500 we have to subtract. So book value is not the original value, it is the value after deducting the depreciation. It is called net book value. So this is the value of furniture on that particular day when it was sold, and it is sold for 8,000. So 500 is the profit on sale of furniture. So that we are going to learn now how to give effects to these adjustments. Here they have given the receipt and payment account, and on the payment side they have written that 10% fixed deposit. The amount is deposited on 1st January 2020, and here the amount of the fixed deposit is rupees 1 lakh. Here in the heading it is given that the account closes on 31st March. It means the non-profit organization will receive the interest for 3 months. The rate of interest is 10%. So 10% of rupees 1 lakh is rupees 10,000. This 10,000 is for the full accounting year. From that we have to calculate only for 3 months, that is from January to 31st March. So that comes to 2,500. So we have to give effect to this interest. So this is the outstanding interest. It is the income, so it should be credited in the income and expenditure account. That is first effect. And the second effect is, it is shown on the asset side. Either it is added in the fixed deposit or you can show it separate, because this is the amount receivable in the future. Anything which is receivable in the future will be recorded on the asset side in the balance sheet. Next, capital fund. Capital fund is like capital for the sole trading organization. It is called capital fund for non-profit concern. So it is shown on the liability side. Whenever there is any surplus in the income and expenditure account, it is added in the capital fund. But if the expenditure side is higher than the income side, and if there is a deficit, it is deducted from the capital fund. So here they have given how to record it. Then now we are going to check the effects of different adjustment. First adjustment is for the outstanding expenses. If it is given in the adjustment that salary is outstanding, then the outstanding amount is to be added in the salary when the salary is recorded on the expenditure side. That is one effect. Then the second effect is, since it is the amount payable in the future, it is recorded on the liability side of the balance sheet. Next, prepaid expenses. Prepaid expenses are expenses paid in advance, for which we are going to receive the services in the future. Now, since these expenses are paid in advance for the next year, so they are not related to the current year. So that is why they are subtracted from that particular expenditure on the expenditure side of income and expenditure account. For example, insurance is prepaid. Then prepaid insurance is subtracted from insurance which is recorded on the expenditure side of income and expenditure account. That is one effect. Second effect, prepaid expenses are shown on the asset side in the balance sheet because we are going to receive the services in the future. Then accrued income or outstanding income. This is the income receivable in the future. So that is why it is added on the income side of income and expenditure account in that particular income account. For example, commission. Commission is receivable in the future. So outstanding commission is added in the commission on the income side of income and expenditure account. That is one effect. Second effect, since this amount is receivable in the future, it is recorded on the asset side. Then income received in advance. Now this income is related to the next accounting year, but it is received in the current accounting period. So this is received in advance, so that is why it is deducted from that particular income account on the income side of income and expenditure account. And second effect is recorded on the liability side of the balance sheet, because since this income is received in advance, the organization has to pay the services in the future. Services are payable in the future. That is why the second effect of income received in advance is recorded on the liability side of the balance sheet. Then subscription received in advance or outstanding subscription. Subscription is the revenue income for non-profit organization. It is paid by all the members. So it is paid on regular basis. So that is why subscription is recorded on the income side of income and expenditure account. So here they have given there can be subscription received for the current year, or previous year subscription can be received in current year, or next year's subscription can be received in advance in the current year, or current year subscription can be outstanding which is not paid by the members. The next point is depreciation. Depreciation is the loss in the value of asset. So we have to subtract the depreciation from that particular asset in the balance sheet. That is one effect, because that asset has lost this much value during this current accounting period. So we have to subtract depreciation from that particular asset in the balance sheet. And subscription is the loss in the value of asset. So expenses and losses are recorded on the expenditure side of income and expenditure account. Then capitalization of entrance fees. Entrance fees is paid by the members when they take entry in the club. So it is normally treated as a capital receipt because it is paid only once. But sometimes the adjustment will be given that 50% entrance fees should be capitalized. And if the entrance fee received is 50,000, then 50% of 50,000 comes to rupees 25,000. And when it is capitalized, it is to be added in the capital fund. And remaining 25,000 is shown on the income side of income and expenditure account. Then creation of special funds out of donations. Sometimes some members or outsiders, they give the donation to the non-profit organization. So normally the general donations are shown on the income side because they are treated as revenue income. So they are shown on the income side of income and expenditure account. Because these donations are given without any conditions. But specific donations are given for some special purpose. The member of the donation intends to use this amount for the special purpose. At that time, these donations are shown on the liability side of the balance sheet. Then next point is about the stock of the stationery. Now this stationery is an expenditure. So if the opening stock of the stationery is given, in that we have to add stationery purchased during the current year. Also we have to add if any outstanding stationery bill which is related to the current year is given. From these three amounts, we have to subtract the closing stock of stationery. So the stationery consumed will be recorded on the expenditure side of the income and expenditure account, and the closing stock is recorded on the asset side. In the same manner, we can calculate the sports material consumed, medicines, drugs consumed. In the same pattern we can calculate. Then opening balance of assets and liabilities. Now, whenever the opening balance of assets and liabilities are given, and if the capital fund is not given, then from the total assets we can subtract the total liabilities and we can find the capital fund. Then the next is about the entrance fees, subscription. I have already explained to you. Legacy. Legacy is the gift received under the will on the death of any particular donor. So these gifts can be general or for specific purpose. General gifts are treated as revenue incomes and they are recorded on the income side. But special purpose gifts are treated as capital receipts and they are recorded on the liability side. Then life membership fees. Now this is non-recurring in nature. So that is why it is recorded on the liability side. It is not treated as a revenue income. Then sale of old assets. So if any fixed asset is sold and if the book value is given, then that we have to subtract from the selling price of that asset. If selling price is higher than the book value, then there is a profit. And then if there is profit, it should be shown on income side of income and expenditure account. But if the net book value is higher than the selling price, then there is a loss. Then loss is recorded on the expenditure side of income and expenditure account. Then there can be sale of scrap or newspapers. It is normally credited on the income side of income and expenditure account because it is treated as revenue income, recurring in nature. Then I think these specific donations, general donations, all these points I have already explained. Then 10th point is endowment fund. It is created for specific purpose. So it can be created from the amount gifted or donated. Since this is for specific purpose, special purpose, it is recorded on the liability side of the balance sheet.